Welcome to my $100,000 stock experiment, Sell Rules, week number 23. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase any stocks that I bought, nor is it an endorsement to purchase stocks in general. My focus is on my sell rules. This needs daily attention and is not a buy and hold strategy. I'm unhappy with my sell rules from last week. I reviewed them, but I'm not happy. The reasons are because I lost most of my gain from Funko. Last week I had been up 47%, and this week I sold it for a gain of 12%, which is still an awesome gain for 5.5 weeks. But considering I was up at 47%, I wanted to examine why. The other stocks that I'm unhappy with have been flat for several weeks, and the market's moving up, but these stocks aren't. And I feel like I'm missing out on an opportunity for a better performing stock. I did a review of my past, what I'm considering good and bad sells. So the sell that I thought was good was a VRNS, and the stocks that I'm not happy about are HQY, Health Equity, and Weight Watchers. So I examined these stocks a little closer to see if I could find out what made them good or bad. This is a 6-month chart for Verona Systems, VRNS. The dashed green line is showing where I purchased the stock and the intersection of that orange box, and the dashed red line and intersection of that orange box are showing where I sold it. I think that this one I sold well. I have been looking at this 20-day exponential moving average, which is similar to the simple moving average, which calculates the gain over a specific period of time, just divided by the number of days. But the exponential moving average puts a little bit more weight on recent activity. So I have both of them shown on this chart. The light blue diagonal line is showing the exponential 20-day moving average, and the pink line is showing the 25-day simple moving average. And I think that the point where I want to start selling my stocks, what I've been calling the magic spot, is after it crosses the 20-day exponential moving average that I should be selling on the day after. So this is indicated by these two red arrows. So the first red arrow is when I really should have sold it, but I hadn't. And then the next red arrow over on the right-hand side is actually where I did sell it. And you can see how it is crossing that exponential moving average, that light blue diagonal line. I had a gain of 21% in 15 weeks, and my high had been almost 24%, but I think that I'm not trying to get the absolute most I can get out of a stock, but I'm trying to still get a good gain without missing out on those high runners. You can see that I sold before there was a big drop, a very big drop. That blue arrow down at the bottom is pointing to 2 days after I sold it that it dropped all that way. So I'm glad I got out of it. This is the Weight Watchers chart, and while I did make a gain in this of 14% in about 9 weeks, I think that I could have done better if I sold at that 20-day exponential moving average. Then my gain would have been 18%. This is HQY Health Equity. So I did sell this for a gain of about 7% in 12 weeks. But if I had sold at the blue arrow at the open price the day after it closed below the 20-day exponential moving average, I would have made a gain of 11%. So I've modified my sell rules based on what I've learned this week. So first of all, I'm going to try and hold my stock for 4 to 6 weeks at a minimum. But I will cut my loss if my stock falls 7 to 8% below the purchase price. And it's okay to sell a flat stock. If the market is performing well and the stock isn't going up and I've had it 4 to 6 weeks, I think I should be getting rid of it. Once a stock has gained at least 10%, then I need to raise the floor sell trigger to the 20-day exponential moving average. At 8 weeks, I'm going to check in with the stock, and if it hasn't gained 8%, then it should get cut. And the last item was on it last week as well. I'm going to be watching the stocks that I've sold to look for repurchase opportunities. Let's see how these rules apply to the stocks that I've sold and that I still have hold. So I sold AGS on 9/11, and I talked last week about these 4 red arrows where the stock was closing at a low 4 days in a row. I did sell it at a loss of 7%. I had held it 3.5 weeks. If I had sold at that blue arrow at the opening price the day after it closed below the 20-day exponential moving average, my loss would have been half, about 3.7%. I sold AMED the day after it fell below the 20-day exponential moving average. I've made 12% in 6 weeks, which puts me on target to double my money in a year. And I think this was an awesome sale. I had been up as high as 16%, but I'm happy with the 12. And I think that this exponential moving average is at the 20-day is a good price for me to be selling at. You can see on the 13th, up on the very top of the screen, is showing you the date, and it's showing that the close price was 120. I have it circled in blue, and then I have an arrow to the exponential moving average was 120.27. So you can see that it did close below at that on that day. Funko. This is the one that made me really examine these sell rules. So I sold it for a gain of 12% in 5.5 weeks, which is awesome. But the week before, my gain had been over 47%. If I had sold it the day after it closed below the 20-day exponential moving average, my gain would have been 22%, which would have been better than the 12%. Comerica, this was a bad purchase. This and the RF. Here's the RF stock, and I'm showing the red arrow is pointing to the day I sold it, and the blue arrow is pointing to where I should have sold it. Basically, a flat, not a big loss, not a big deal. If I apply this theory of the 20-day exponential moving average, selling stocks that fall below that, Tandem has not done that for 6 months. This is a 3-month chart, but I looked at the 6-month chart and it has not triggered that. So this would still want to have hit a sell trigger. Omnicell also has not closed below the 20-day exponential moving average for 3 months. And PetQ, the same thing. So those are 3 good holdings. ATTU did cross below that exponential moving average, and I should be selling it. Also of note, the second red arrow on the right-hand side is showing that the 10-day simple moving average is crossed below the 25-day simple moving average. So although this price seems to have stabilized in a range, I am going to go ahead and sell this stock next week. Here's the weekly holding change sorted by the lowest percentage at the top. No losers this week. NSP was below 1% gain a week, but that hasn't happened for 2 weeks in a row, and I've taken that off my sell rule anyway. So we'll go ahead and see how these stocks perform. And here's the current gains of the stocks. The all holdings bar chart show that Tandem continues to scream. It's at an all-time high for this portfolio at $58,775. That's on a $10,000 investment. Looking at the All Holdings bar chart without TANM gives us a better view into how these stocks are performing. PetQ is doing a great job. 10 weeks, it's up almost 50%. So that's great. And I have that 20-day exponential moving average floor trigger set, so I'll get notification on that. Omnicell is up 23%. NSP is slowly moving up. It's up about 6%. I've had it 4 weeks, so that's doing awesome. And ATTU, as we already talked about in this presentation, it is going to get cut. Benchmark is showing that I'm pretty even from last week. Still up 59% in 23 weeks. Awesome job, on track to double my money in 1 year. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel. Don't forget to hit the bell so you get alerts when I post a new episode.